I just unmuted myself.
Okay. Yeah, we can hear you.
Okay.
Can you share your screen, or do you want the rights?
It seems like it says I can share the screen.
Yeah. Okay.
I'm going to share my entire screen. Hopefully it won't be too big for everybody.
You mean too small for everybody? Or?
Too small, that's what I mean.
Yes. No, I think you might have to increase it a bit. It's a bit small.
It's a bit small. Then what I have to do then?
What you have PDF, right?
Yeah, I will just...
Oh, this is a website? Okay, Control Plus. You are using Mac or Windows?
Windows.
Yeah, Control Plus. That will zoom.
That will zoom.
Yeah, Control Plus. Yeah, Control Plus. Yeah, you are zooming on the Adobe side.
A lot of other stuff is seen, so you may just want to go on that screen which you want to present and expand that.
Yeah, let me just only present that screen. Are you able to just see that screen now?
We are only seeing your PDF.
Yeah, we see the Japanese candlestick charting techniques.
Okay, now do you see do you see it big enough?
Yeah.
No, the PDF is big enough. Yeah.
Okay. Now, I want to first of all disclose I'm not particularly a great expert in this since Nari, but I have been following Candlestick for many years now. I may not be as much of an expert on technical stuff as much as Venkat. Venkat is definitely better than me. But I tell you what I know. I'm kind of prepared to talk to you for about 20 minutes or so. Basically, Japanese candlesticks is a technique that the Japanese people have been following chart reading for many years. You know that the Japanese culture has been there for a long time, and so they have been using this candlestick reading as a guiding light for chart reading and technical thing for a very long time. And then towards the later part of the 80s, the early 90s, 1991 or so, another person came on the scene in the US. His name is Steve Nissen, and he is the recognized expert in candlesticks. He wrote this book, Japanese Candle Charting Technique. It's a PDF which Nari has, and whoever wants it, Nari can email it to them after this meeting. It's a pretty exhaustive book, so I didn't really prepare any big presentation with the PDF and other things. Anybody who's really interested to go through the details of this book, there is a 300-page book. This book is version 1. Somebody is echoing. Is it me? Okay. Can you hear me now?
Yeah. I can hear you. I muted the other person.
Okay. There's a version 2 of this book that Nari has. He can forward it to anyone of you who may like this. And I just want to take you through some of the highlights, and I want to show you the way it works. Okay. And so I'm going to be very quick and following. If anybody has any comments, please let me know. Okay. Now I am going to a website. It talks about various patterns, candlestick patterns. So the candlestick, I want to kind of go out on the limb and say, candlestick reading is something like a horoscope reading, something like a zodiac signs. And it tells you what's going to happen in the future. You have to kind of believe in it. It is it is technical. Almost all technical chart reading is a little bit of a belief involved, because you are predicting the future based on some patterns of the past, and a candlestick is exactly that. So there's a little bit of a jumping off the cliff kind of a feeling you will have, but they do have some logic behind it. So there are several patterns here. If you go to this website, candlecharts.com, and candlestick training, candlestick patterns, Steve Nissen talks about some key patterns. This particular web page is pretty good, and I can go over each one of those, but you can also read this yourself at your spare time and follow this as much as you want. And quickly, I'm going to go into the chart themselves in Thinkorswim so that I can give you actual examples of this. So for example, I'm going to give you, say, take this bullish engulfing pattern. What this pattern is, okay, anyway, before I proceed, in the last time we had the technical discussion, our friend Venkat went through how to the wicks and the chart reading with respect to going down, and you see the body, the opening and closing, and when it opens, when it closes, the body and the wick of the chart, that he went through that. So you have to use this particular candlestick as your display in your Thinkorswim or any platform that you use in order to be able to read this. So this is one pattern in which it says bullish engulfing pattern. That means if the previous day, if the stock went down from one level to another level, that is by this red, here it is black and white in this book, but in the chart it is red. If it went down a little bit, the next day it starts below the red and closes out on the top. That means a bullish situation has happened. And then from that point onwards, the chart is going to go bullish. That's a bullish engulfing pattern. One of the reasons why I wanted to show the entire screen was to be able to go back and forth between my chart, my actual Thinkorswim chart, and this web page that we see in front of us. So maybe I will try to do that. It will make it a little smaller, but maybe it'll be okay. What do you think, Nari? Should I do that so that I can go back and forth between the two?
But we cannot read anything in this.
Even now you cannot read anything, right? Can you read?
You can do Control plus. Just do Control plus on this browser, then it will zoom in.
And
Okay.
Nari, can you record this?
Yeah, I'm recording it.
Okay, thank you.
Okay. Control plus.
Yeah, control. Yeah, now it's better. Yeah, now we can read.
Now you can read.
Yeah.
So this is the bullish engulfing pattern I was talking
Yeah.
about.
Now we can read it. Yeah.
Now you can read it. And now this is the bearish. It is the other way around. If yesterday it went up a little bit, can you see my mouse?
Yeah.
Okay, we went up a little bit, and then the following day it engulfed this upward trend. It went down from above that to below that. That's a bearish pattern. So like that, there are many patterns here. This is a bearish situation where the chart went on going up, and then you have a big hammer with a big head. That is a trend where the trend reversal. From that point onwards, the stock is going to go down. That is a bearish trend. So the other way around, when it keeps on going down, suddenly it goes up, and you have an inverse hammer like that. That means it is going to be a bullish pattern. From that point onwards, the stock is going to rise. So that's another pattern.
Yeah.
Like that.
Sorry, Bala, can you close that pop-up which says candle charts, wait, don't leave? I don't know. It keeps, it is still there. Yeah.
Okay.
That's better. Thanks.
Okay. Yeah. So like that, there are many patterns. So here the pattern itself shows the upper shadow, the body of the candlestick and the lower shadow, that we all know about this. I'm assuming we know about this. So I am going to go to the chart itself now, and I'm going to tell you a couple of examples of this, of what happened. Okay.
Yeah,
So
I think some people may not be totally familiar. If you can just explain open, close, high, low, that'll give them.
okay, the candlestick itself is every day there is a selling pressure on the stock and a buying pressure on the stock. So let us assume there is a buying pressure from the bottom. People are trying to push up the stock value, and there is selling pressure on the stock. They are trying to push the value of the stock down. That is trying to push the value of the stock down. So there is always a battle between buyers and sellers every day. And so that battle is defined by this candlestick pattern. At the end of the day, the battle is over. How was the battle fought, and how did the battle end by the end of the day? That's what this shows. What this shows is, if it is a pattern like this, this is the bottom, the lower part of the real body of the candlestick is the open price. That's the price at which the market opened the stock. And then during the day, from the top of the wick to the bottom of the wick, the price went up and down, varied between those two based on the selling pressure and buying pressure. And it closed at the top here, at the top of the body. That's the closing part. So you have a little wick or the shadow on the top and the lower shadow at the bottom. And this is what happened. That this pattern gives you the history of that trading during that period. It could be 1 day, it could be 1 minute, it could be 1 hour, or whatever be your time period of your chart selection. This shows you the beginning and the end of the battle of buyer and seller. When the buyer are fighting with sellers, this is the definition of what happened. So that's the basic definition of the candlestick pattern itself. Now, how this pattern one follows the other is how you are trying to go into predict in the future. Just like I said, it's like Guru going into Dhanu Rasi or something. So it's something like that. It is a little bit of a predictive model based on some zodiac signs or something like that. That's what these are, in my view at least. Okay, but anyway, a lot of people believe in this, and one of the big points about technical reading of the market is only because many people follow it, it becomes real. If many people follow the candlestick patterns, then some people will start trading on the candlestick. That itself will push the candlestick towards where the prediction is.
Right.
So a lot of times, you follow what I'm saying?
Yeah,
so a lot of times it's like a herd mentality.
Prophecy, right? Self-fulfilling prophecy.
Yeah, it is a little bit of a self-fulfilling prophecy. So you have to take the technical reading with a pinch of salt, but at the same time, technical reading works. So that stock traders should not belittle technical trading. They cannot go completely by fundamentals, because sometimes technical trading is important and it works.
Yeah,
because it works.
What I read was fundamental analysis is mathematical, right? So it's more analytical, whereas technical analysis actually proves your behavior. It analyzes the behavior of people, like the buying pressure, selling pressure, and so on, right? So that is why this works.
Emotional. Yeah, that's what you mean.
Yeah. Behavior. People
somewhat similar, somewhat illogical. So in my view, it is comparable to horoscope. But at the same time, if everybody follows it, it seems to work, because for so many people, there are enough evidences that it works. Okay, and some people may take offense to what I'm saying. There are people who completely believe in this technical stuff. I'm not one such person. I go off with the fundamental trend of the stock is also important. But once you choose your stock, then following technicals on that stock is a good thing. because then you will be able to buy at low points and sell at high points and make money on the high and low, and you will be able to do trading accordingly once you are already convinced on the particular stock. So I am in that philosophy. I don't blindly follow this patterns. But anyway, these patterns are very, very important. They have worked for a long time, and these are important for all of us to know about. Okay.
Yeah.
So the doji pattern is another one that I use a lot. It normally tells you a reverse of a trend. If a trend is going up and up and up and up, and you find a doji pattern, which is where the opening and close are very close to each other, and during the day it may have volatility, it may have be there, it may have traded across a whole bunch of numbers, but it has traded very close to open the close of the period. That means typically it means a reversal of a trend. The gravestone pattern is the same thing, which is at the bottom rather than a dragonfly, which is in the middle. In the gravestone pattern normally happens when it is coming down. When the stock price is moving down, when you see a gravestone pattern, that means it has hit the bottom and it is going to turn upwards from that point onwards. So that's another philosophy. So if you go to this website and you read on the right side of this is a beautiful page, candlecharts.com. It's very simple. Everybody can follow this. Evening star pattern is another one where it gives you something like a doji. It's a small variation that has happened here. If it happens on the evening star on the top, that means it's a bearish situation. The morning star is like a bullish situation. There's the opposite at the bottom level. And there are patterns like this.
So,
if you see
Bala, obviously, it will be very difficult for people to go through all the patterns by themselves. So, can you, if you have to nominate the top 3 patterns that are really useful for detecting like a change, a reversal of trend or whatever, right? So, what are the 3 top patterns?
The doji is the number 1.
Yes, doji is number 1, definitely.
Doji is clearly, in my view, doji is number 1, and that clearly gives you a reversal. And then I would look for, in the middle of the trade, I would look for the engulfing patterns. If you have a bullish engulfing pattern or a bearish engulfing pattern, that gives you a very good idea. And then there is this, this evening star and the morning star are also, this is the morning star. The hammer pattern is also something I use. Mm-hmm. Hammer pattern also shows you, a hammer is a pattern where the stock is trending down, and then you see a hammer pattern here like this on one day. The next day it goes up like this. Then it's a bullish pattern. From that time onwards, you're going to see a 5% or 10% rise in the stock price in the next coming 10 or 20 cycles. So this is a very important pattern as well. This hanging man pattern is the same thing, the reverse of the hammer, where if it keeps on going up and then you see a hanging man, that means it is going to go down from there. So that's another one that I use. I don't use these things. These things are too technical for me, this Harami pattern and all. So I won't go through that. This
Bala, can I ask you one question?
Yes, anytime.
So question is, so what history you look at to predict for when you stop looking at the history and when you stop predicting?
Okay, now that's why I quickly want to go to show the chart itself so that you can figure it out. Okay. So there are many patterns here that you can look at them. I have kind of showed you the ones that I see most of the time. Okay.
Okay. Yeah.
Let's go to the chart. That's very important. Let me share the chart. Okay. Now I have shared the chart. Can you guys see this Google chart?
Yes.
Okay. So in the Google chart, as you can see, So if you take this section here, okay, there is a,
Can you zoom in, Bala?
I don't know how to zoom in,
Do the same, Control plus.
Uh,
but I don't know whether it'll,
Yeah. There you go.
okay.
this is within Thinkorswim. Control
Yeah.
Within
plus.
the question. Okay, now, okay, let me show you here. Okay, here, see here, I put a line here. This is a downtrend line that you saw here, right? In this downtrend line, you have been seeing, so you take a look at this and then it created a big hammer here right after this high bullish or high reached. The next day, this big hammer happened. That's a reversing trend. So if that happens, then it is time to sell here, at least a covered call you can sell here if you are going to hold on to Google in the long run. This is the time to do a covered call here. So that is giving you an indication that there is going to be a downward trend. Okay, this downward trend, when did it get reversed? It got reversed here in this doji. This is almost like a doji here. This is a Morningstar doji. So you had a down here and then you had a doji, approximate doji, it went up. That means that there is a positive trend coming up. So on this day is a time to buy. Even though the next day it went down, you know that the bottom has reached. This doji indicated the bottom has reached. So that is a reversal trend that shows you, hey, that's how you're going to go higher from here. So sometimes when you're doing a trading and you are going to use other in signals as well. For example, here at the top, when you reach the top here, you have the stochastic indicator, you have the RSI indicator. Both of them are showing you sell signs. So you have confirmation from other indicators that it is a sell. So it is clearly a sell situation, and you can at least sell a covered call here and you can make some money. At the same time here, when it came down here, you see the RSI is also down. Your stochastic indicator is also at the bottom. Now this is a good bet to buy. So you can also look for this pattern and then look for the timing and signals from other signals. You use them to make your decision to buy. So that would have been a good time to buy. And then as you follow them here, you follow them. See, you have so many other signals here, but you can continue to follow them and see what happens. Maybe this works very well. I am showing you a 1 year daily pattern chart here. So that's what I trade on. People can trade, day traders will probably trade on a minute chart or a 4 or 5 minute chart, or you can trade on a 4-hour chart. I don't really think it matters. It works on almost all the time frames. I use the daytime chart, a 1 day chart over a year, because my holdings are, I buy and I hold it for at least a year, and then I sell my covered calls at least on a weekly basis or sometimes on a monthly basis, depending on when the covered call is available for me. So when I do a covered call sale, I'm doing a 1 month out. That's what I will do here, or a 1 week out. That's what I will do here, and it works very well. And then you can use, remember in the other talk, I was talking about delta, buy at 85 delta in a longer term and sell at 35 delta. You can use the delta selling techniques on top of this chart. So that gives you timing as to when to do it. And that gives you a little bit extra oomph on what you can make. All right. And if you go through these things, see, you will find, see, this is another one here. This is almost an engulfing bull situation where the full length is almost gotten here. That might give you an engulfing. Also, that's an earnings situation there. So let's not worry about that. Earnings date, these things don't work as well. So It should be used on a normal date. If there is a big news or a big earnings, that beats all the chart reading techniques, that blows it away. But rest of the times it works. So you can go through every one of these and do it for yourself. I don't want to take up a lot more time with you guys, but this is a good a technique to follow on a trading scenario, or to when to get in. A lot of people ask, hey, this is a good stock, but when do I buy it? So
Bala, once again, I go back to my core question.
Yes.
Let's say in this chart,
Yes.
where are you at any point of time, and what is the history and what is the future?
Yes. So, like, for example, today, if you go today, let's go today. Okay, this is another pattern I want to show you here. In Google, what happened was, upon earnings on for 1st of December, 1st of February, the thing jumped up. So there is another belief that when a jump like this happens, there will be pressure to cover that jump before it goes higher. So there is always going to be some pressure here. Selling pressure will be more because of the jump. But see, this is today. See, for example, take this doji today that happened on Google. Google is almost a doji here on the top here. More than likely, Google is going to go down from here. If you ask me to read the Google chart now, it closed at 2064. It is probably going to go down to 2000 or below 2000 in the next 3 or 4 days, maybe week time, before it goes eventually higher. It's a good start. It's going to go higher eventually, but these are the times. For example, if I am already in a sell position on Google, but today I would read Google as a stock that I would take a covered call on, because I expect the stock to go down $60-$70 in the next 3 or 4 days, as per this chart reading that I'm reading right now.
Bala,
Yes.
for this chart, you will use either a minute or a day, whatever it is, but there is no moving average here. That's purely.
No, you can add a moving average. I actually add a moving average. I usually use a Bollinger Band on top of this. So that Bollinger Band tells me some additional signals. So here there's a Bollinger Band, a 20-day moving average is here. Sometimes I use 50-day moving average, sometimes I use 20-day moving average. So you can use the moving average as an additional information on top of this. So here, if you look at it, there is this 20-day moving average which has been breached in the previously here. Now it is over on top of it here. So maybe it is going to breach for some time. So the candlestick is saying I'm going to go down, and maybe it is in a downward trend. So it is on the top of the chart here, top of the band here. Maybe it is going to go to the bottom of the band before it goes up again.
So let me rephrase my question. So if you draw a moving average, just pick up something, 20-day moving average, still you can interpret the candles like your doji or
Yes, you can do that.
Okay.
I mean, moving average, stochastic index, RSI, or any other technique that you use, you can do it on top of the candlestick. Candlestick is only going to give you one indicator, and you can use other indicators. I mean, if you go to a pure candlestick guys, they may think differently. As far as I'm concerned, I use it as one of the signals, but they work. Doji particularly works very well. This engulfing patterns works very well. And sometimes I use this, say, for example, take this pattern, this pattern, where you had a down day and you had 3 up days, 3 or 4 up days like this, and then you had another down day. This is a negative. This means subsequently the stock is going to go negative. Where was I? Here. So it went negative for the next few days. And then, of course, another engulfing pattern came, bullish engulfing pattern came, and it went up. So this is a prediction for the next 3 or 4 days or next 4 or 5 cycles. And then you take it from there.
Okay, no, I think that was great, Bala. I think you captured the essence. So people
Yes,
can
thank you.
people can go through the candlecharts.com and then study for themselves, right? So I think
Yeah.
this is really
And
a
if
good
you want
start.
to have a little bit more discussion, questions, and stuff like that, we can have another session.
Yeah.
I don't think I said 20 minutes. I want to give you a brief overview of this.
No,
And I think it's a good one to follow.
yeah, no, this is great, Bala. Thank you very much. So we will move on to Vikram. Vikram, are you on now? Vikram, did you join through phone? I texted the phone number. We still cannot hear you. You are unmuted, but we still cannot hear you. Did you join through the phone? I texted, I chatted, I put the chat phone number. Just join through the audio phone. That should work. 415655.
He says he is on the phone, Hari.
Oh, I don't know.
He's
trying again.
I don't see him. I see him only through the computer. I don't see any call. Oh, call in user. Okay. I think I request call in user 4. I sent the request. I think you might have muted the phone.
Can you hear me now?
Yes.
Yes.
Okay. Finally, I think there is some other setting on the phone. Even though on the phone I had unmuted myself, for some reason you guys were not able to hear me. Is it all good now?
Yeah, it's good.
Yeah.
Are you sharing any screen?
No, I'll just talk through. Like, I haven't prepared. I just thought I'll let people know like whatever I have learned so far in the SPAC space. So again, I'm not an expert in that space, but that is something which I have been like following through for last 3 or 4 quarters and kind of seeing through what has been happening in that world. So I thought I'll share whatever I have learned so far. So I'll get started. So SPAC, most of you would know, SPAC stands for Special Purpose Acquisition Company. So it starts like a blank check company. So somebody who is has got big history in terms of what they have been doing in the market, or hedge funds, those kind of people kind of get into this SPAC business where they will create a blank check company. So it's like a shell company where they wouldn't be doing any specific business per se, but their primary goal is to see if they can form some kind of an alliance with a company that's not public yet. So that's what most of the SPACs do. So in terms of SPACs, the way the model is constructed is like when we talk from a trading perspective, right? There are 3 things that are important from SPACs. Like one is the SPAC unit. So when any SPAC becomes public, right, the first thing that happens in public is the units comes out. So when you go to any recent announcements, right, saying that, hey, this particular SPAC has started to trade, on day 1, you would just see units. So what SPAC unit means is it's a combination of a SPAC stock and a small fraction of a warrant. So the small stock is always called as commons. So you will keep hearing those 3 words: units, commons, and warrants. So on day 1, you would always see the ticker with .u most of the times, or it would end with U. Like, say, for example, if I take Pershing Square Tontine Holdings, right, which is from Bill Ackman, PSTH, you would see that on day 1, it would have started with a ticker PSTH.u, or it ends with the letter U. So that means that's a unit. So as part of that unit, what they do is they will have a common. Common mean when you split this unit, the unit will split into commons, which is 1 stock, and a fraction of warrant. So warrant, what warrant means is warrant is gives you an a right to exercise your warrant to one stock in the future. So there are many rules and protocols around warrants. I'll come to that in a little bit of time. But the key fundamental is if you're buying any SPACs, you would typically start off with buying units. So that unit will continue to be traded for first 52 days. So after 52 days, after which a SPAC has IPO'd, on that day, the unit will split into commons and warrants. So typically a value of commons is $10 and warrant could be defined based on the fraction that's there as part of the unit. So that's how the warrant split happens on day 52, and then suddenly you will see that on all the trading platforms, you will have like three categories for the same ticker. So if you look at PSTH, you will see PSTHU, which is unit, and then there will be just PSTH, which is just a common share, and then there will be PSTH.W or plus, depending on the kind of platform you are in. So that means it's a warrant. So the way things are different in warrant is warrant are redeemable only after a specified time frame. So say, for example, a company, SPAC company, finds a merger and goes through a merger, warrant will have a specific expiry date. So in most cases, warrants would have an expiry date of 2 years, 3 years, 5 years, or it could be any number of years down the line. But once a merger has been found, there are certain rules that comes along with warrants. So what happens is, say, for example, there were quite a few companies that went into public recently, right? One company that is exercising warrants right now is Golden Nugget. The ticker for that is GNOG. So the protocol for exercising warrants is after a company, SPAC, blank check company merges with a company, right, of whatever their target is, they have to hit a specified price range for next 30 days. So if they meet that criteria, the company has got an option to say that, hey, I want additional capital and I want all the people who have warrants to redeem by a particular date. So for Golden Nugget, as an example, they said that all the warrant holders need to exercise the warrant by 5th of March. So what it literally means is if I hold a warrant and warrant has an, let's say, a cost of $3 or $4, so I am eligible or I have a right to buy one stock with one warrant at a strike price of $11.5. So that's how warrant works. You can look at it something similar to how you look at options. So like it is all future dated and there will be some specific rules around how a warrant can be exercised. So it generally goes by these two rules which I just said. One is based on expiry date, which could be pretty long, few years down the line. And the second thing is based on the merger happening. And then post-merger, it maintains a specified value. I think the value should be about $15 or $18 for a 30-day time range. If it meets that criteria, then the company can say that, yes, we want our warrant holders to exercise the warrant options. So that's about warrants. So in terms of the whole SPAC life cycle, right? So once a SPAC becomes public, there is an SEC filing that happens where they would specify the details of their whole SPAC, where they'll try to specify that for each SPAC unit you buy, how many warrants you would get. For typically the warrants I have seen is it will be 1/2 or 1/3. In certain scenarios, I have even seen 1/8. So what that means is if you have 5 units of a particular SPAC, and the split is for 5 units, you get one warrant. So it will be divided by that. Like let's say that you have 100 units of Golden Nugget, and the warrants that they are specifying as part of their SEC filing is 3 warrants or 5 warrants per unit. In that case, you would get 20 warrants. So that's how warrants gets planned along with the SPAC itself. So it's all specified right at the SPAC itself. So you can even buy as units, or you can wait for 52 days and buy it as commons or warrants, depending on what your appetite is. So once that happens, after 52 days or whatever it is, the company starts searching for a potential merger. So in the SEC document, they would also try to specify what kind of merger they are targeting, what industry they are targeting, so those kind of stuff. So it will give some indication on kind of company they want to go. And they would also specify who are all the part of the board for SPAC. So typically when I go for buying any SPAC, I look at the people who are running behind those SPACs. So each SPAC, if you see, there will be some prominent names in the industry who would be working as directors or managing directors or those kind of roles. And they will be the people who will be trying to run the whole SPAC and figure out what's the right merger and what should constitute that particular merger. So now it has crossed 52 days. They look for identifying a merger. They do all these discussions and then finally figure out that, yes, this is the company we want to merge. So in certain scenarios, what happens is these blank check companies have a bucket of money, right, which might be 500 million or 1 billion or 4 billion or whatever that is. The acquiring company might figure out that that money is not sufficient. So in those kind of scenarios, they bring in pipe investors. So pipe investors could be anybody like who want to make a private investment into that public equity. So typically you would have seen a lot of news that Chamath is making a lot of pipe investments in a lot of SPACs. So he has been someone who has been very, very active in this whole SPACs. Like in last 6 to 8 months, like he has closed like 3 to 4 SPACs, and he has made pipe investments in 4 or 5 SPACs as well. So that's pipe investment. So the way they constitute the whole deal is, so imagine that the company has got 100% of stock. So they will split the whole company based on the valuation of what percentage of stocks will be retained by the existing company shareholders, what percentage of stocks would be given out to the pipe investors, what percentage of stocks would go to the SPAC company. So typically it would range from like 7 or 8% to 20%. The higher the percent it is better, because that would make sure that as a SPAC investor getting into that company, you're not being heavily diluted there. So those are like high level fundamentals in terms of like what happens in that SPAC world, how these things would happen. The other interesting parameters, what I see in the whole SPAC, this thing, right? So once SPAC is announced, there are a lot of information around saying that, oh, this SPAC is merging with that company, this SPAC is merging with this company. So based on that, there is a lot of trending in prices that would happen. So if the players are very prominent, right, it's very rare that you can get a SPAC at $10 a unit. Typically, I have seen that it crosses $11, so which means you are adding a 10% premium to buy a SPAC. And based on each news, right, you will see that there are spikes that happen. So the first spike happens when there is any kind of positive merger news, right? So the best example that we can all relate to is CCIV, where there were rumors that it's going to merge with Lucid, right? So the moment you hear some positive news that a merger is going to happen in Bloomberg or Financial Times, you will immediately see a spike, probably 10 to 20%. And on that day, you would see that there is a lot of trading activity that happens, and a lot of people might end up selling their SPACs as well. The reason being, like, they got that 20% return in a very short span of time. And then once that selling happens, there is a small dip that happens, and it will continue to wait for definitive agreement. So that's the next stage. So once the rumor is done, in many cases, there might not be a rumor. They might directly do a definitive agreement. Certain cases, they also do something called as LOI, which is, I think, letter of interest or letter of intent, where they say that, yes, we are talking to this company and we are looking to finalize certain terms on how we want to do the merger. So if you see that LOI, you would again see a spike in the SPAC in terms of the price. It will go up for a couple of days, and then depending on interest, it will start to come down a little bit. Then the third stage is the definitive agreement stage. So definitive agreement means both the SPAC and the company that is supposed to be acquired, they have agreed legally that, yes, we are going to do the merger, and they set some set of conditions that needs to be met as part of that merger. So once that is done, that is officially announced that, yes, we this company, SPAC company, and the acquired company is going to do that merge, and it comes as a public news that gets announced. So on that day, based on the company they are merging with, you would again see a bigger spike happening. And then depending on how there is a demand on the market, you would see that the price might fall out a little bit as things move along. So that's the definitive agreement stage. From definitive agreement stage, what happens is each SPAC company also gives some kind of timeline saying that we will complete this merger in next couple of months or in a quarter or so on. So they'll give certain indication saying that I'll do it in Q1, Q2, or H1, H2, or something like that. So till that point of time, you would see that the SPAC values are typically stable. It keeps hovering around the same place unless there is terrific action happening on that particular stock. And then as you move closer to the date, right, on whatever time frame the SPAC organization has said, there will be some more things that will be coming to your way. So the first thing that happens is the voting. So as part of SPAC merger, right, every shareholder gets an opportunity to vote for or against the merger. So as they get closer to the merger date, right, they'll send an email out to all their shareholders asking them to vote and give their opinion on whether you want to merge with this company or not. So they have to get a specified percentage of votes in favor of agreement so that they can go ahead and do the merger. If the voting count is very less, they will say that we would push the voting end date to another day, and then they will ask for more and more people to do the voting. But typically, I guess this is all driven by institutions because they would vote, they would have the majority of the votes, and they would drive how everything happens with respect to SPACs. So that's another key thing that happens as part of your whole SPAC cycle, right? You'll get emails, you put in those voting and all the stuff, and then you get an option to see what happens after that. But there is also an option that at any point in time you feel that you don't like this particular company. I guess you also have an option to take your cash back, which is $10. Depending on the kind of SPAC you're in. So you get $10 back saying that, okay, you're not keen on this merger, and there is some mechanism by which you can say you can still get your capital back. So these are all happy scenarios, right? The unhappy scenarios is now with so many SPACs going public, there will be a series of SPACs.
Vikram, I had a question, right? So are you saying that at any given time you can sell it to the primary seller SPAC itself instead of a secondary seller? Or
it happens during the voting time, Larry.
Okay.
So as you get closer to the voting stage, right, they would ask you saying that do you want to vote for or against? And I have seen in a couple of instances, right, where they say that where there is an option for you to say that like you are against the merger and you want your capital back. But in most cases, you wouldn't see the prices being below $10.
Okay.
So that's the most likely price you would have paid, right? But if you have bought at $20 or let's say $25, like you would not get $25 because that's a market purchase rate, but not the initial IPO price that was there.
Right.
So you would always get only the $10 that's there.
IPO price, okay.
Correct. So
Right.
that's the biggest advantage I would see, right? Like if I were to buy any SPACs, right, I did a lot of mistakes earlier, but now if I want to buy SPACs, I always try to buy at a price which is closer to 10 or maybe 10% or max 15-20% premium. I don't want to go above that range for a newly IPO'd SPAC.
Right.
Because the more I pay, the opportunity for me to lose is higher.
Right.
But again, as long as you have right people behind it, there is no reason that it will come back. Like the best example is PHTH, right? Pershing Square. When it started trading, it started at around $20, and today it is at $29. There is no rumor of any merger. There is no definitive agreement.
Yeah.
But within 1 year, you almost made like 50% profit in that.
Yeah.
Yeah, similar to that, the CCIV case is like extremely intriguing case because they started off with 10, but there was more and more merger news happening with Lucid. It went up to $60 actually, which has never happened for any SPAC.
Right.
Without even any definitive agreement. The reason it fell down such a big way is because like for people who bought it at $10, it's already 6 times the profit, right?
Yeah,
So that's one. And
yeah.
right, like, and there was a massive sell-off. That was the only SPAC where I saw that the price went even before there was any definitive agreement. Like no SPAC has crossed $15 as far as I remember without a definitive agreement. So this SPAC went to $60 just on rumors. And then when the definitive agreement came, by that time, like everything had like picked up so much that it fell and it crashed. Like now I believe it's around like $20-25.
Yeah, so Vikram, so yeah, I was one of those casualties, right? I think Actually, there are probably two, 3 people in the group, right? So if it reached 60, whatever, and then the deal happened, and still, with Lucid, the deal happened, and it still went to half 30, and it's around 30 now, right? So
Yeah, it's around 20. Yeah.
around 30. So what is your stance now? I mean, on CCIV? I mean, do you think maybe is it okay to like buy more on average out, or?
Like this is again my personal opinion. Like I liked what I saw in Lucid. Yeah, like the company seems to be very, very good and impressive. Like I like it again depends on individual's appetite, right? Like if you want to average it down, you could do that. But personally, I felt it's a really good company, and like I plan to stay invested in that company for like long term. Like I'm not looking at a short term for that. But when you're in SPACs, like you have to remember that like there are a lot of people who are in SPACs for short term. So that is why when I was explaining that all the stuff, right, rumors, there is a sudden spike that happens, then it'll come down after 2-3 days. Then LOI, again it'll spike up for a couple of days, then it'll come back. Then definitive agreement, it spikes up, it comes back, and it stays that stable state unless there is any news that pushes things up. It'll stay the same till the merger actually happens. And what has happened of late is, like in last 2 weeks, right, there is a lot of, negative publicity on SPACs, which has also killed the valuation of SPACs big time. So if you look at what happened in last 10 days, every other SPAC, the value has come down by like double a normal stock that would have happened. Like if Apple has fallen by 10%, you would see even a good SPAC that is merging with a really good company is falling by that particular percent. So one thing what I would also additionally recommend is, like off late what I've been seeing is even ARK is making significant investments into these SPACs. So when I started out in the SPAC segment, right, the first SPAC where I saw ARK making an investment was OpenDoor. That was around like 6 or 8 months back, even before like it officially started trading as like open. Earlier it was IPOB, if I remember correctly. It was one of Chamat's IPO. So that's when they started, and now I can see that ARK is making a lot of significant investments in a lot of SPACs, right? Especially anything related to space or genomics. Like I've seen them making significant investments into those SPACs. So that could also be a good indicator for you to see like who is investing into those areas, and then figure out whether when you want to get in. I think the most important thing is patience. Like at least I have burnt my hand with few SPACs because I didn't know about all these curves on when it increases, when it goes down, and all other stuff. But now, as I'm seeing more and more, I definitely see that to be a pattern. But again, if the company is good, you need not be worried because it's definitely going to spike up from $10 or $20 that you would have paid. Except Lucid, like there is no other company which has peaked like crazy, right? So if you have bought at $10, like it's a great place to start.
Yeah, but how do you know whether it is a good SPAC or not, right? You said if it is a good SPAC, so just based on who is the promoter, or?
Yeah, like that's what I look at. Like if you go to a website called SPACtrack.net, so that has got a list of all the SPACs that's there in the market, and it will also tell who are the prominent leaders driving that SPAC, and who and what segment they are targeting. Is it finance? Is it technology? Is it SaaS? So all those information is there. It will tell the price of warrants. It will tell the price of units and everything. And it will also give you information on how much time is there for them to make a deal. Because sometimes what happens is SPAC cannot make a deal within a particular time frame. Then they have to file with the SEC for extension and all the stuff. So there are few rare scenarios where I've seen the SPAC value to come below $10 as well.
Oh.
Vikram, how does the terms like momentum 20, momentum 2000, how do they factor into the valuation?
Like I do not know what is momentum 20 and
whenever they give you information about SPAC, they give you that. I mean, some numbers around that, and I guess it must be some sort of factor that gives you the valuation. So.
Like I haven't seen that for SPACs. Like I like I'm not sure on what that is. So I don't want to misrepresent there.
Vikram,
Yeah.
this is Gopi. A very, very interesting discussion on SPACs. I was just wondering, like, can these companies like CCIV or Pershing Square, like, can they do, multiple acquisitions?
With one SPAC, with one SPAC, they can do only one acquisition. But what they do is there are people who do serial SPACs as well. So Michael Klein, like who runs that CCIV, right? Like he's a serial SPAC guy. So he has got a lot of SPACs running behind him. Then there are a few other players like Chamath, right? Like Chamath has got like IPOD, IPOF, which is still not merging. Like they haven't announced any merger, and he says that he has plans to go till IPOZ. So like there are few players like who have got strong reputation. So you want to see that who are the players behind the SPAC before you put any money there. And always remember that one thing which I missed mentioning is the reason people invest on warrants is it is high risk and high gain. So the way warrants work is, I told you, right, the strike price is $11.5. So let's say that CCIV, right now, let's say that it's at $28. So if warrant is at $12, right, I would rather go and buy warrant there, because the advantage I have is warrant is $12 plus 11.5, it's 23.5. But the risk I carry there is if the merger doesn't happen and for some reason the whole SPAC deal goes away and the whole SPAC becomes, useless, or they terminate the SPAC, warrant doesn't have any value. So it'll be a zero. So you lose your money completely. But people buy warrants even before any kind of news comes in. The reason being is when you buy warrants at $1 or $2, right? Like if you look at some SPACs, right? You can buy warrants at like $0.50 or $1 or $2, and then the common price would also be around $10 or $11. So the proportional rise that you would get in warrants is phenomenal, because it always works closely with your commons, right? Like commons, if common is $14, your warrant generally will be around $2.5. So if you have bought your warrant at $1.5, like you are making like a 60% profit there. So that's the reason like a lot of players want to play with warrants, where they would buy thousands and thousands of warrants. And then once there is any kind of news of merger or anything, right, you will see that your $10 becoming $14 is like 40%, but your $1.5 warrant becoming $3 is like 100%, right? So that is something which a lot of people do. So that is why you would see that warrant would always have a higher value than commons right now, because that's feature related. Plus people also look at it from this angle. So tomorrow when the price increases, with warrants you get really, really high returns. But again, the same holds true if it's a crappy merger. Right now, like people are very smart in selling their stocks immediately. The moment some SPAC is not to their liking in terms of where they merge, you will see immediate sell-off happening. So in that case, you would end up losing money from warrants as well. But there are like a lot of people doing warrants out there in the market. And what warrant also means is, like from your trading account perspective, warrants are units, right? Those are all reorganization. In the sense, when you want to split your units to warrants and commons, you have to pay a small fee. Like say, for example, I use TD Ameritrade. I have to pay a $38 fee and submit a request for my units to be splitted into commons and warrants. And similarly, if I want to exercise warrants, I have to pay a fee of $38, where whenever that call comes from the organization, right, saying, hey, we want to exercise warrants, then you pay the $11.5 or whatever the guideline is for that particular SPAC, and then get the underlying company that goes through. What's also important is also look at the kind of companies they are merging with. A lot of companies do not go the traditional IPO route is because of guarantee of funds. With SPAC, they have the guarantee of funds, in the sense SPAC is already having that blank check, which is like $300-400 million as an average, and then they have capability to bring in these pipe investors. So a lot of companies go for the SPAC option instead of going the traditional IPO route, where they wouldn't know how their company would be evaluated and what kind of price they would get on their share and other stuff. So things get more easier here for them in terms of pricing and guaranteed amount of money that they would get from this deal. So that's the reason, like you're seeing, like a lot of companies are going with SPACs.
So question, Vikram, how do you buy the warrants?
So warrant is same, like as long as you're on a proper trading. When I say proper, I mean the prominent ones like TD Ameritrade or Charles or those kind of places. You would be able to see your tickers ending with W or plus or some kind of a different notation, and if you click on that, you should be able to see that they'll put some information saying that warrants expiry date 2025, 2027 or something like that. So for CCIV on TD Ameritrade, the warrant ticker is CCIV plus. So plus is warrant.
Okay.
And
So
if it is .U, yeah.
Yeah, .U is units, I guess, right?
Yeah, even units are there.
Yeah, so if I bought the CCIV stock, that cannot be converted to warrant, right?
No, those are separate. Only units can split into commons and warrants. So warrants is purely like warrants, right? Like in the sense you can exercise it at a later point in date, depending on what I said earlier, right? Like 30 days after becoming public, meeting the benchmark price, or like whatever future date they would have said. Typically, they say 1 year after merger. So those are the dates. But again, the merging company can call for warrants to be exercised. It depends on when they need the money.
Okay. Thanks. Yeah.
Yes. So go to SPACtrack.net. I felt like that has got tons of information. It keeps giving you news on what mergers is happening and what is happening in terms of when units is splitting into warrants, when voting is happening, and all the stuff. So there are some really good mergers that have happened. There are some crappy mergers that have happened as well. But most of the times, like once a definitive agreement is reached, right, there will be a standard presentation that goes into SEC, which will have the investor presentation, right, where they talk about what their company is, what is the distribution of their shares across the SPAC company, parent organization, pipe investors, if any, and then what is their growth, all those things will be there. So of late, what I've seen in last couple of weeks is there is a phenomenal number of space-based companies getting into public actually. So if you see, there is a huge spike in terms of companies that became public, like Astra. Then a couple of days back, what was that? Black Sky. Then Momentous. All these good companies, they all went through the SPAC route in last few weeks, and there are many more companies. I think Aerion, Supersonic Flights, even they have gone. They have got a definitive agreement with few SPACs. So most space-related ones, I'm seeing that they are going through the SPAC route because it's highly speculative and it will take like few years before they really make profit in that space.
So,
yeah.
So in terms of so SPACtrack, .net has most of the information, but are there any other sources? And you mentioned that additional cost comes in only when the actual acquisition happens and you want to acquire the company share, right? Otherwise, there is no extra cost. What are the trading costs for SPAC, warrant, and other things?
Well, it's same as you purchase like SPACs, right? You can purchase units or warrants or commons. Like it's normally as you
Like a
buy
stock.
anything, it's just like a stock. It's just like a stock. It's just that the rules and protocols behind it are different. Like warrants is more like, as I said, like options, right? Like it has got an expiry date, so you have to make sure that you look at that. Or companies might call for exercising. So you have to be wary of that. And if the merger falls through, it doesn't have any value. Right? It's a $0. So all those things are very critical.
Right. And what is the correlation of SPACs with the general market? Let us say if the market collapses, SPAC also, what is the impact on that?
Yeah, like last 10 days I can say, right? Like I have invested in quite a bit of SPACs. So it has been much worse than the regular companies right now. That the reason is a lot of people are beating SPACs right now heavily for different reasons, because they are seeing that a lot of companies are going public through this route, right? So SPACs are heavily beaten down now. So now I feel it's a great time to invest on really good SPACs, which are
Okay.
closer to that $10 range. So if you want to investigate and figure out like what space you want to jump in, so that's where that SPAC track is really good. So if you go to that portal and then click on that active SPAC list, which is right at the top, so that is a laundry list of all the SPACs that's active right now, and there you can apply all the filters that you want.
Filters.
If you click on pre-IPO, right, you will see what are all the IPOs that they are working with SEC to know what's happening in that space. The other indicators, what I have seen is this is not a guaranteed indicator. Many people apply for new SPACs when they are pretty close to finishing off a deal. So we have seen, at least I have noticed that in 4 or 5 different cases, right, where the same set of people have filed in a new SPAC, they have closed a deal in like 3 or 4 weeks. So even that you could look at as a trend, but again, that's not a guarantee that the merger is going to happen.
Okay.
If you go to that pre-IPO, it tells you all the SPACs that are in pipeline. But what I personally feel is in the last 6 to 8 months, right, there has been an overkill here. So now we have to be very careful on where we invest, because I don't think all these SPACs are going to find a merger like the way it did in the last few months.
Right. So there are more SPACs than companies looking for a merger through this route, right? Probably.
I think there are just too many companies, and I'm not worried about number of companies. I'm worried about the quality of deal that they will get. So
Okay.
when SPAC
Right.
does the merger, right, what portion of the company they get, what type investors get. So those things plays a lot of
Correct.
what to say.
Yeah, probably
Importance.
the companies have more SPACs to choose from, right? So they can play one
The
SPAC
negotiation
against
power
other.
goes away.
Right. It's a demand
Yeah.
and supply. Right.
Correct. The negotiation is going to be the biggest challenge, right? That's where you need good deal makers. The other thing, what I would also recommend is don't invest in trusts that are really small, because you do not know whether 200 million is good enough to find a good deal in the market or not.
Right.
Like say, for example, the Bill Ackman SPAC was the biggest blank check ever, right? Like he did it for 4 billion.
Wow.
That's the biggest SPAC they ever had. And as I said, like if you had invested on day one, you would have made like 40-50% by now without any news.
But he still hasn't bought anything, right? So it's still open?
No. It's still open. There is no news out as well. Like they were talking, they would merge with Stripe, Bloomberg, Chick-fil-A. Nothing definitive. There is not even rumor as of now. There is no rumor. These are all just speculations.
So do they give any interest or anything? Dividend, no interest or dividend, right? So this from this, like if they
what I read is if your SPAC falls through, right, they dissolve the SPAC organization, typically they are expected to give you your initial investment plus some accrued interest, minus some fees. Okay. I do not know what exactly those numbers are, but that's what I read. And that's when I started feeling that, hey, like this is a safe investment, especially if you buy it at the $10 range. Correct. You literally don't lose your principal. But now everybody knows that, so you can't get a SPAC at $10. It has to be at a premium.
Vikram, can a company give, say, for example, 20% of its shares to one SPAC and then another 10% to another SPAC, or that deal only with one SPAC?
When you say a merging company?
No. I thought SPAC buys a part of the company before it becomes IPO. Am I right?
Correct.
So the company, can the company give 20% when they go IPO, 20% to one SPAC and then another 10% to another one, or it has to make deal only with one company, one SPAC?
They would have to deal with only one company. That's how I understood it. So if they're running short of funds, that's where these pipe investors come in, like private investment. So for Lucid and CCIV merger, that Saudi Arabian related investment company also made additional pipe investments.
Hey, Vikram, will the pipe investor get a better deal than the regular stock investors of SPAC?
So pipe investor is like your typical investor where they would get they would buy at $10 kind of a price, right? So they would always get benefited out of it. It's like big people buying, like if you notice, like a lot of stocks do a follow-up offering, right? So after they're public for a few years, they want to raise capital. They would do some offering, but in short, the stocks that we hold, the price comes down, but somebody else would be buying at a very discounted price, and we don't get that price. So you can look at pipe investors similar to that. They crack deals outside the shelf and figure out what portion of the company they're going to get based on the value, the amount they are going to pump into this merger.
So would that mean that if somebody is going for a pipe deal, that means it's not good to begin with?
Not really, right? It again depends on what portion a pipe gets, what portion a SPAC gets, and what's the valuation of the company. So if the SPAC shareholders get very, very small percentage, single-digit percentage, that's what I've read to be a bad deal. And if you're getting closer to 15 to 20%, which is the norm, it looks like the SPAC company has made a good deal. Because there is a lot of greed on the SPAC group as well, right? They have certain things which they do to make more profit for them. But again, so in those kind of deals, you would see that the percentage that you get out of that company might be smaller. But typically, like 15 to 20% seems to be a good range. But again, like I'm not an expert. The way I have been investing on SPACs is few I have started right at start. Like say, for example, the one which I invested very recently is called SRNG. The SRNG stands for, I don't remember the form. It's Soaring Eagle Acquisition Corp. The reason I bought this particular ticker was the people behind are the same ones who did the merger with DraftKings and Skills. So those were also two SPAC-based merger, and both the companies are like really, really good companies. Like DraftKings is all the betting-related stuff, and Skills is related to online gaming stuff, which is again a big market disruptor. So I felt since those folks got a really good deal, I thought, okay, let me invest right at the start there. So if you look at that, the unit price is starting at 10.75 now, and for every 5 units that you have, you get a warrant. Yeah, so you would see a lot of very prominent names, like people who found PayPal, people who found Google, like Eric Schmidt. So even those people are in one or the other SPACs. So in that SPAC track, like just search for any prominent names that you want to search for. If you search, you will get it. Like Peter Thiel, you would get it. Like Peter Thiel has a couple of SPACs. One is BTW and Bridgetown, and they're looking for something to do in Asia. So those are a couple of SPACs like which I felt has got good names, and then I thought, okay, I should try invest that. But again, incidentally, like when I bought it at a premium. Now the price is even lower than what I purchased, because at that time SPACs were all running at a premium. But now with all the negative publicity in the last few weeks, the prices have come down. But still, like if you feel there are good stocks, like it's a good time to buy, because at close to $10, like you're not losing much, especially if they find a good merger, right? Things will boom. Like imagine buying DraftKings at $10. It's running at $60+ right now.
Vikram, I'm not familiar with SPAC, but the symbol, will it clearly say it's SPAC rather than, because I don't want to be confused with the regular stock?
No, there won't be any way to distinguish with your ticker. Like say for example, I was talking about this Soaring Eagle Acquisition Corp, right? The ticker is SRNG, so you wouldn't know whether it's a publicly general company or whether it's a SPAC. It's difficult to find out. But one way to find out is if you buy those units or warrants, right? The units or warrants will have something like .U, .W, or plus that indicates that it's not a normal ticker. It's a unit or it's a warrant.
But the normal sticker, but do they have a normal sticker too? Because I don't want to go and buy without knowing what I'm buying.
Like as I said, like for SPACs, there are 3 ways you can buy, right? One is units. Units will have .U. And commons will be like normal stock tickers. Like big commons, whenever it's ready, it'll just have those four letters or 3 letters or whatever that is. Then the third class is warrants. So warrants and units, they have some key ways to distinguish. Units always ends with U, or they have a .U, At least that's what I've seen in TD Ameritrade, but there could be different ways they show in other platforms. And then warrants always ends with .w, W or plus. Like for CCIV, it's CCIV plus warrants, and the normal units is CCIV.u, and then commons is CCIV. But again, like if you don't want to be confused with all these units and other stuff, you could buy the commons whenever it's there.
So common will be the SPAC stock itself. Am I right?
Correct.
Then I don't have to worry about exercising warrant or all those things.
Correct. And the advantage I felt, like recently what I learned is if I buy units at a very, very early stage, right? Units will always split into warrants in like 52 days.
Mm-hmm.
So you also get additional value for that warrant, right? And generally by that time, the price becomes $11 plus. So which means you already gained 10% there.
Mm.
But again, you have to pay something to TD Ameritrade to split your units to warrants. Otherwise, the unit price also increases. By the time it goes there, it will be like $11 or 11.5 and all the stuff.
Okay.
Can you also
But yeah,
sell
like,
warrants? Warrants can be sold separately?
Yeah, it's normal. As you sell stocks, you can sell warrants, you can sell units, you can sell, buy and sell all three of them.
Mm.
So, Vikram, I was just looking at SPAC Track. It looks like there is one, just for an example, BOAS, BOAS, BOA Acquisition Corporation.
Do you want to share your screen, Gopi? Gopi, you want to share your screen or?
It's on a different laptop.
Oh, okay.
No. Yeah.
No,
So
what's the ticker, Gopi? OR?
BOAS.
BOAS. Okay.
Yeah. So the SPAC list is like Scott Seligman from the Seligman Group. The resources are 230 million. The contract is $9.99. Units, it says 1/3 W, so that probably means like 1/3 of it is a warrant.
Like if you buy, if you have 3 units of this particular ticker, right, BOAS dot unit, whatever they want to call, if you have 3 of them, you will get 1 warrant.
Right. So, and then it says warrant 1:1, and it shows $11.5.
Correct. So what does that mean? Warrant 1:1, what it means is if you have 1 warrant, you can get 1 share. But there are also few warrants where you need to have 2 warrants to get 1 share. So I think if you search for another ticker, which I think is NBAC, go for NBAC.
Okay.
Yeah, I can
So
share.
there you would.
Yeah, we are not going to do covered call today. Don't worry, guys.
Yeah.
So if you
So
go to
newborn-
NBAC, you would see that the warrant ratio is 2:1. So what it means is if you have 2 warrants, you have option to exercise for 1 stock. And the number below that is the warrant strike price, which is 11.5.
So what is the ticker code you said? I am sharing my screen.
NBAC.
Sorry?
N for Nancy, B for Bombay, A for Apple, C for cat.
Newborn Acquisition Corporation.
Okay.
So if you see here, at warrant, it is 2:1. So what that means is if you have 2 warrants, they will give you 1 stock. And at a strike price of 11.5.
Okay, can we just explain this? So their target focus is Asia, and target company, what is that? NUWE?
Nuve is vehicle to grid based company.
Okay.
So we are all in that.
They have already announced this. They
right?
announced the deal. Okay.
Correct.
And trust value is what?
57 million.
Yeah.
No, I know what it is, but what does trust value mean? Like that is the money they collected?
Correct. Like when they IPO'd, right? Like this is the funds they collected by selling shares.
But currently it is even though they collected only 57 million, it has grown to 112 million because the But
Commons value
price
is
is still
15.5.
15, right? Price is still 15. So how did it go up so much? See, if it went
So
from
it
10
will
to
be, it would have started at $10. Then there is that warrants also coming in, right? So I do not know how they calculate, but it should be a combination of that.
yeah, right. The unit price is 1981. I think that is why it is coming like that.
Correct.
Right.
Correct.
Okay. 1981. Okay. And then warrant price is 222. And what is this? Can you explain this? This.
So this one is what they are saying is for each unit you would get one warrant.
Okay.
I do not know what is this 1R 1/10 share. I do not know. Redeemable probably 1/10 share. Yeah. So what they are saying is unit is for each unit you get one warrant, and warrant is half the share, I guess, probably. I do not know what this 1R 1/10 share means. But after that is warrant 2:1, which means if you have two warrants, you will get one share in the future, and at a strike price of 11.5. So that is why if you see your unit price will always be commons plus twice the warrant price. So 15.05 plus
Plus.
4.46 will be closer to 19.91.
Oh, nice. Okay.
But under certain circumstances, right, you will be seeing that there is a good gap between warrant and commons. So that happened with Nikola. So when Nikola went public, right, they had an option to exercise those stocks. So warrants were trading at a very low price, but the commons were at a high price. So what happened was a lot of people bought warrants at a low price. They exercised it, they got the stock and sold immediately for a huge profit. So that's the reason Nikola stock went like crazy after it went public, because that company took a long time to do the acquisitions, and then after 30 days, they had that price target that they had to maintain. They got that, and warrant became exercisable, because Nikola said they wanted to raise some capital. So that is also something that plays a part in terms of how the price could go up or down.
And sorry, what is this 11.5 again?
It's the strike price. So if you want to exercise warrant in the future, right? So that's the price you will be paying for one stock.
Oh, okay. So this $2.23, it's like an option. It gives you the right to buy the stock at 11.5. Is that
correct?
Oh.
The only thing is, if you don't exercise your warrant or the merger doesn't happen, warrant is $0.
Expires worthless. Okay, exactly like option then.
Correct.
Okay, and then
Correct.
you have the intrinsic value 1.78. Okay.
So, I would leave those fields. The other field, what I would look at is percent progress to deadline. So that will also give you an indication of how much time these folks have.
Oh.
So if you go to some new tickers, you'll be able to see a lot of information. So if you scroll all the way up, right, there are tons of filters this website has added, which I kind of like if you want to review, right? So you can apply filters for
they have these standard
below
filters,
10.5.
Warrants below.
Correct. And someone was asking me how to know a sponsor. You can click on well-known sponsor. Serial sponsor means people who have done a lot of SPAC deals.
Okay, and then you can download the whole table as an Excel, and you can do your own analysis.
Yeah, but I think for that you have to pay something.
Is it?
Yeah, $10. So if you just do it, whatever you want on the website, it's free. Otherwise, it's $10.
Okay, that is how they make money.
Yeah.
Okay.
But
very good.
This information is good enough, where you can pick the market you want to target, EV, tech, fintech, energy, and then figure out how you want to play in the SPAC market.
No, this is great. No, this is perfect. Thanks, Vikram. Any other questions, guys? I think we are going to wind up after this not covered call.
Yeah.
Yes, you'll all sleep then.
Yeah, I also thought I'll be done in 10 minutes.
No, this was great. Frankly, I did not know anything about SPAC. Now you have made me somewhat knowledgeable.
Hey, I have a quick question, Vikram. When you see the trust value, say in this case, 57 million or whatever, does it mean that it is a target trust value, or is it already, they have already received it? Like, for example, if a big shot throws a new SPAC at, say, $1 billion, and only subscribers only subscribe half of it, the other $500 million, is he going to put out of his money, or the trust value itself can vary depending on subscribers?
So again, like I would say, like don't get into too much of details. Like I would say, like I've just pinged you a link, right? So if you look at that presentation, so that's a merger that happened with Quantum C, with I don't remember like what was the parent organization for this. I think CMLF or something like that. And I think this was one of the places where ARC made investments, if I remember correctly. So there were, so in short, like if you go to slide number 6 in that deck, right? So there they show the whole transaction information. So they talk about what portion is the existing stockholder that rolls over, and what proportion is going to pipe investor, what is going to high cap public. So if you see this grid, like this grid gives you the complete information on how this pack is structured.
Ah.
So like that, when they do the definitive agreements, right, you will have a lot of links actually.
But this is going to be, you are not going to get this when the time you buy the SPAC.
Not when it is, this kind of presentation happens after a definitive agreement is reached.
Yeah.
So the SPAC company and the target company agree that yes, the deal is done. At that time, they make this presentation. So on the day they announce the merger, these kind of presentations will always be there.
Yeah.
So if you just search investor presentation on that company, you will get the detail, and you will be able to see like all the things, like what is their business plan, what is their growth plan, and all other stuff.
Yeah. Good.
I have a question. Can you hear me?
Yes.
Yeah.
Okay, so what's the difference between a VC versus SPAC? If you are Peter Thiel, why would you just not go VC and not have all this headache?
So when you say like you're talking about getting funds from a venture capitalist,
Yeah, like you can have your own venture capital firm with like billions of dollars behind that you now can go invest or fund the company, get into all kinds of ownership stake, and incubate the company before it goes taken to any higher level. What's the path that is SPAC gives Peter Thiel that the venture capitalist system did not give?
So again, I'm not an expert there, so people can chime in if I'm saying something wrong. My understanding is with SPAC, like with venture capitalists, you can put in the funds there, but when it becomes public, the amount of price fluctuations that you can get on your investments is going to be phenomenally higher, right? So if you look at the Airbnb stock, right, when it was not public, you can buy that internal shares through all those equities and other places. The prices would be completely different from what happens when it comes into the public market, right? So that could be one reason. And the other reason is every company at some point in time wants to become a publicly traded company for different reasons. Because if they want to get market attention, if they want to gather more funds in the future, they could do all those additional share offerings and all the stuff, right? So becoming public is also a status for a company.
Right.
So I think it could be all these reasons. And then with SPAC, you're getting that guaranteed money, right? Bigger pot of money. Well, you could get it from venture capitalists as well. Nothing wrong with that. But you don't get that option of going public.
Yeah, because I thought with SPAC, when you started, you have a definite timeline to find a company that you're going to merge with.
Yeah, I think you are asking from the, say, Peter Thiel point of view, instead of starting venture.
Then my next part is the pressure, the time pressure that the SPAC will have in finding a company will also kind of dilute the companies that they would be forced to get into. So in other words, we as investors would have to be kind of
correct. See,
latch ourselves into big names.
Yeah,
so
but the main difference is it's like crowdsourcing the money, right? So because you get a lot of money from so many different people rather than just a few VCs joining together and joining a company, right? taking over a company, and the company is still not public, then they still have to do IPO and all that. Here, straight away from the company's perspective, they are straight away on the market because there is a SPAC already established, ticker code and everything. They just change the ticker code and they become public.
Yeah, I can see that. Yeah.
Yeah, like that's the major reason, right? The lure is how can you become a publicly traded company? I think that's where SPAC comes into the whole game, because the standard process to become public would take like 6 to 9 months
Right.
minimum for a company. But SPACs gives you that quick way to do it, right? Like if you remember when we were following the news on Lucid, right? In March, sorry, not in March, in January, I think in their internal company meetings, I think the CEO said that we aspire to become public by June before we release our first car in the market. So that's a clear indication that they cannot go the traditional IPO route, because if they have to do, people were speculating on the internet that it's going to take 6 to 8 months. At that time, everybody said it's going to be SPAC. So, and likewise, SPAC happened for that company. So I think those are all reasons, right? Like if you want to do a fast forward and become a public traded company, like SPACs gives you that cushion. But it comes with all risks and guarantees, right? Because SPAC also has got an end date. They have to find a merger in 2 or 3 years based on specify. But there are also avenues for extension. I've seen a couple of SPACs getting extension, saying that they want to pursue for some more time getting into SPACs.
Thank you.
Yeah, this was great, Vikram and Bala. You really made the day. That was both excellent presentations. And what we will do is, because we have a lot of topics in backlog, we will try to, and also the like spring will start and everybody will become busy going out. So we will have once a week for March. We will try once a week for March, and next week it will be a Wednesday rather than a Tuesday, right? Because we want to do the ARC presentation, and it is available only on Wednesday. So next week we will have ARC and covered call.
Yeah. Hey, one quick question. So Vikram, so on the SPAC, is it safe to say it's an good entry point is till 10 to 15, right? And definitely not more than 20, right?
Yeah, the lower the value it is better, but it also depends on the kind of merger, right? So there are a lot of companies, like if you look at what I was telling earlier, right? DraftKings or Skills, Virgin Galactic was one of the first SPACs that got earlier SPACs of Chamath that got merged. So there are a lot of companies like where the numbers are like $50+ right now, and they would have all started at $10. But there are also few cases which have gone below $10. So it heavily depends on which company they are merging with and who are the people behind it. Like anybody who is a big shot, they don't want to do a bad merger because that's going to spoil their reputation. So that's the reason I felt like going with big names is much better here. Because
like Chamath, right?
Yeah, like Chamath has done a lot of deals, so like he is very prominent in that space. But again, that doesn't guarantee that his next 2 deals are going to be great.
Right.
Like the deal which he did with Clover, people didn't like Clover Health, so that's trading below $10. I think that was ITOC. But the other deals that he did was all awesome, right? Like Open Door was great. Sophie, I like it. I think if Sophie had IPO'd, it would have easily been a $50+ stock, because everybody had like it's one of the top disruptors in the
it's like
industry.
Robin Hood.
Yeah, so those kind of things. And many times people also underestimate SPACs, because like the reason I like SPACs is when we look at any IPOs, right? Can you ever get an IPO stock at an IPO price? Like Airbnb, DoorDash, Snowflake, none of this a general public got at a listed price. We all had to pay inflated price there, and that's where I think a lot of people started pushing SPACs, because at SPACs you can be an early investor at a very small price, and if the merging company is really good, you can be as good as a big person, like buying at an IPO kind of price. So that's something which a lot of public are talking right now. The reason why like people love SPACs is because SPACs gives them opportunity to get in early at a listed price, versus IPO, where they always have to pay premium for good companies.
Great. Yeah, thank you very much. I think it was a very great presentations, both of you. Thank you very much, and we will resume next week. Thanks, everyone.
Yeah.
All right. Thank you.
Thank you, Nari.
Bye-bye.